Money FM 89.3. Best of breakfast. Companies to watch.
All right, and joining us again is Delightful Dan. How are you doing today?
Good morning, Ryan. Oh, excuse me. But yes, welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. 8855-0893. You know the drill. Text us and tell us whether you think it's going to be a hot or not. Ryan, what is one thing in life that makes you very happy?
Oh gosh, just sitting here and doing this show every day.
Don't be cliche, Ryan. Okay, I can say this for almost everyone, okay? And it's got to be a big, fat bonus.
That too.
Yes. Who wouldn't love to wake up with a 7-month bonus?
Why not 8?
When was the last time you remember receiving an 8-month or 7-month bonus?
Yeah.
Right?
Not in my line of work.
Well, that brings us to the next topic, Ryan. If you haven't already been following the news, Singapore Airlines announced last Friday that it will be rewarding its employees with a profit-sharing bonus that's worth almost 8 months after delivering full-year net income of $2.78 billion that beat analyst estimates. Now, according to Chief Executive Officer Goh Chun Pong, employees will be paid about 7.45 months bonus. That is lower than the 7.94 months received a year ago.
Yeah, so not just a great way to fly, but a great place to work going by the bonus.
Oh yeah, certainly so. Now, the quote-unquote smaller bonus payout comes as Singapore Airlines on Thursday had warned that tariff and trade tensions on top of broader economic and geopolitical uncertainties could hurt demand for passenger and cargo flights. That's a narrative we've been seeing playing out in the airlines space at least. So before we dive into the forecast details, let's have a look at SIA's financial report card. And on the back of robust travel demand and a one-off non-cash accounting gain on the disposal of Vistara, SIA had posted a record performance for financial year 2025. The second half of financial year 2024 revenue had grown by 2% year-on-year to $10 billion. Passenger flown revenue nudged up by 0.6%. Passenger carriage grew by 5%. Passenger load factor was about 0.5 percentage points lower at 86.8%. Cargo flown revenue, on the other hand, had grown by 4.9%. Cargo loads were 7.3% higher, while yields were fairly stable. So if we look at it as a whole, operating profit had fallen by 37.3%, while net profit had risen to 3.9% to a record $2.8 billion on the accounting gain. So they've also proposed a final dividend of 30 Singapore cents per share. That brings the total payout for the year to 40 Singapore cents per share. And it represents, based on the last closing price of about $6.88 when it first announced, it represents about 5.8% yield. So that does seem like an interesting pick for dividend lookers out there, wouldn't you think?
Yeah, so you have a couple of things going on. First, you mentioned Vistara, which is the Indian business they have. So a bit of a one-off gain on the front. Also doing well to some degree is the cargo side of things, not just passengers. Revenues are growing, but I think you are starting to see competition start to creep in and provide some headwinds to the wider group. So I think there's a lot going on and starting to be, I guess, more challenging for the business going forward.
Yeah, and that has been noted by the CEO during its latest reporting card. While the airline had been confident about robust travel demand, US President Donald Trump's ever-changing tariff policies have been hurting consumer sentiment and upended global trade flows. And speaking at a post-results briefing on Friday, Singapore Airlines CEO Goh Chun Pong had remained confident that the airline remains in a strong financial and commercial position with $10 billion in liquidity to withstand any evolving tariff shocks. He also did say that the outlook for passenger demand looked robust in the face of tariffs, with Chief Commercial Officer Lee Lik Sin saying that there hasn't been any specific impact on travel to the US. Are you holding back your travel plans, Ryan?
No, not quite. Maybe I'm traveling to nearer places at least, so maybe that's going to be something people will be thinking about more as they tighten their purse strings and readjust their holiday plans.
Yeah.
So that could play out for SIA with, I suppose, where ticket prices are right now. People are starting to be more conscious of spending on big ticket items to some degree and holiday plans. So you might see that play out for SIA.
For sure, and in contrast with major U.S. carriers, during their latest briefing, from the likes of American Airlines Group and Delta Airlines, which withdrew their full-year guidance, while United Airlines Holdings took the unusual step of offering two forecasts, factoring in scenarios with and without a tariff impact. So it does seem like SIA at least is on a better boat here. So let's talk about forecasts. Management believes that SIA is well positioned to weather tariff-related impact and volatility, which is not expected to be as severe as the fallout from COVID-19, given its strong foundation. And that being said, analysts are now saying that they see risks of further supply chain disruptions placing pressure on margins in the near term. Growth concerns could also potentially dampen consumer sentiment and hurt travel demand, as we've mentioned before, though SIA's management did note that they did not see any weakening in forward bookings at the moment. So then again, let's not forget that passenger yields have peaked and are on a moderating trajectory as other airlines progressively return capacity to the market, especially in the region, suggesting how they're almost back to pre-COVID days. But as of now, analysts are saying that the share price of Singapore Airlines is fairly valued at the moment, even as several lifted their target price and recommended a hold on the stock after the airline group published its financial year 2025 results. So apart from, CGS International, DBS, UOB Kay Hian and OCBC, we've only got Morningstar cutting their fair value projection by 5% to $6.10, while the rest of the group had posted, to a range of $6.40 to about $6.88 so far. Would you agree with them on this, Ryan?
To some degree. I think this is where, to some folks, there's a difference between a great company and a great stock. I'm just looking at the dividends that they've announced, and in the latest FY, the second half, you're looking at 30 cents. That is down from about 38 cents in the same period last year. So you are looking at a final dividend that's lower for the latest FY. So not great news for an investor. And of course, with the headwinds, with all tariffs and uncertainty, airlines are going to face some turbulence.
Yeah. I guess also in a way we could see that as, them just trying to be conservative and making sure that they've got enough cash flow to move around with in the case of the tariff trade war that's happening around the world. So the bull case would be SIA could benefit from the drop in Brent oil price and an appreciation in Singapore dollar against the greenback. Cargo could remain more resilient, and the US-China truce in the tariff war to spark front-loading of shipments in the coming months might lead to upside surprises in cargo volumes and yields. But then again, the bear case, like we've all talked about, moderate business travel and cargo demand. Verdict for me, I'm probably going to go with a hot. What about you?
Yeah, I'm on the fence. I don't really like airline stocks per se because of all the moving parts. And you really describe a long list of them. So anything could go wrong. I don't have the appetite for it.
That's a fair point, Ryan. All right, and that pretty much wraps it for our Stock in Focus today, Singapore Airlines. Now, Singapore Airlines actually began as part of Malaysia Singapore Airlines back in 1947. Did you know that, Ryan?
Yeah, long history.
And it wasn't until 1972 that Singapore Airlines became an independent entity, marking the start of its journey as a standalone career. So do you know what Singapore Airlines slogan is?
No.
Take a guess.
Tell me.
Okay, a great way to fly. Did you know that?
Yeah.
Okay, all right. Now, you're familiar with the rain vortex at Jewel, right?
That's right, at Changi Airport.
Do you know what it's called?
The Jewel.
Close enough, right? Now, up until I think last year, it was called HSBC Rain Vortex because this was in collaboration with HSBC, the Global Banking and Financial Services Organization, as a naming rights partner. But the sponsorship only ran for about 5 years. So it expired, and then today it is called the Jewel Rain Vortex.
Oh, okay. So it's a name change. Did SIA get involved?
No, I think they just stuck to it.
All right.
Yeah. So, that pretty much wraps it for Stock in Focus, Singapore Airlines.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.